is Charles Morgan with the Land Beside the Water Group at Keller Williams Seneca. Today I have the pleasure of talking to a good friend of mine, Joe Holcombe, with Internal Financial Solutions. How you doing, Joe?
I'm good.
Listen, you have got one heck of a neat business. It's unique. I've not seen anybody that does what you do. And you're helping me and my wife, of course. So the reason we're here today is to get the word out about what Joe does. Joe, what do you do?
Well, I am in the financial services arena with a totally unique approach. Mm-hmm. I believe that we've been taken over by the government, by the banks, and by Wall Street, and we need to take our control of our money back.
Absolutely.
So to control your money means that you have total access and total freedom to do what you want, when you want, and how you want, and you're not limited by the government or these other institutions. Now, my peers always want to use the word average. When they use the word average, they say that, this product that I'm going to invest your money in is averaged 10% for 10 years or 12%. Well, if you had a guy that got you a 50% return on your money the first year and 50% the second year, but he lost 50% the third year, that's a 16.67% return average, okay? But if you had a guy that made you 4, and he made you another 4, and then the third year also made 4, he's of course got a 4% average. Which one of those guys do you like best? The 16 or the 4?
Well, initially I would say the 16%. That's a bigger number, right?
Okay. Yes. 16% average rate of return sounds a whole lot more than the 4. What's the key word in that statement?
Average.
Average.
Yes.
Okay. And here's the deal. I don't care what I made per year, and I don't care what I lost per year. I don't even care what my average was. What I really want to know is what? What I really want to know 3 years into my investment.
I want to know, what have I really made?
How much money is in my account today?
Absolutely.
Okay. Mr. 16.67 says, in the account you've got with us, this average 16.67%, you've got $112,500. Mr. 4% says, in the account you have with us, you've got $112,500 at average 4%. And I prove it. First year you've made 50, you've got 150, then you made another 50, you've got 225. You lost half of that, so you've got 112.5. You add these and divide by 3, you've got 16. You've got 104, 108, 112. Compounded is 112.5. So here's the deal. You averaged 16%, but you made 4%. Did this guy tell me wrong?
No, but it seems a little bit odd.
It's very odd. But this is average, this is actual. This is where we focus. What can my money actually do to create the greatest net effect of my money?
Well, I'm all about net and the bottom line.
Net's all that matters.
Absolutely.
Okay. So that's what we teach. We teach you how to get the greatest net effect of your money and how to make it work more effectively. And here's one last question I've got for you. If you wanted to climb Mount Everest and you had 2 guides, you flew over there, you sat down with 2 guides, and you said to those 2 guides, I want you to help me do my life's goal, and that's climb Mount Everest. One of them says, I'm going to get you to the top.
That sounds like a pretty good idea to get to the top.
But the next one says, I'm going to get you to the top and back down. Which one you want to use?
Well, to be honest, I don't want to stay there, so I guess I need to get back down, right?
You're not going to live up there.
That's right.
Okay. Now, in relation to retirement, when I'm 65, where am I as far as Mount Everest goes?
I guess you're at the top.
I'm at the top. So now what do I got to do?
You got to get down.
My financial planning friends never tell you how to get down. They only teach you how to get to the top. You've got to come down on your own. That's not good. I'm going to teach you how to come down, okay? That's vitally important because when you get to the top of this mountain, you've got to come down. 73% of all deaths on Mount Everest have come from coming down and not going up. Retirement's the same thing. 73% probably of all the people that lose money are doing it in retirement years and they don't have time to gain it back. So what I do is to teach you not only how to get to the top, but to how to come down. And I finish with this. I've got two guys that are financial planners. One's going to help me get $1 million at age 65, and one's going to help me get $2 million at age 65. Which one should I use?
2 million, right? I mean, that's the bigger number.
Okay. Now, where am I as far as Mount Everest goes?
I guess that's the top.
I'm at the top. I got to come down. Okay. Now, Mr. 2 million says, I can give you 3% of your money, which is $60,000 a year, taxable.
Ew.
Mr. 1 million says, I can give you 6% of your money, tax-free, which is $60,000 tax-free. Now, which one you choose?
I'm going for the million.
Okay? This is true net worth, Charles. That's where we separate ourselves. These guys teach you how to get a bigger amount, but they don't teach you how to get the most income.
Sure.
I can teach you how to get the most income with a lesser amount of money because I'm teaching you how to get it in a net effect. Okay? That's why we're different. And that's where I set myself apart and teach you how to make the most use out of every dollar you're currently using without risk.
Amazing, folks. Listen, I know you had gotten me a book. It was, what was the name of that book again?
Smart Retirement.
So if somebody wanted to read that book or get that book, they could get that from you, right?
Yes, I can get it for them. Yes.
So how would they contact you to find out more about this planning? I mean, this amazing structure that you have, and to get a copy of that book.
My number is, my cell phone is the best way to get me, and that is 864-419-4064.
All right. Listen, thank you for your time today, Joe.
Thank you for allowing me this.
Listen, we appreciate it. And if you'd like to have your business, organization, nonprofit, or anything spotlighted on a parkbench.com/Seneca video, give me a call. My number is 864-873-8754. We'll see you next time.